Hi again, everybody. Coulter Brown here from the Northern Ag Network with a lot to cover in this month's update on our livestock markets. It seems like the tide is finally starting to turn for the markets. We're seeing leverage improve for cow, calf, and feedlot producers, and prices are getting better. Now, prices are only half the story to profitability. A lot of producers are still facing challenges from drought and, of course, high input costs, but the current markets do give us some hope about the future. Today we're going to talk about the cattle futures. We'll look at the fed cattle, calf, and bred cow markets. We'll talk about what's driving the improved market leverage, look at the cattle on feed report, discuss where we're at in the current cattle cycle, and what the weather forecasts have to say about this winter. First, let's pause though to thank the sponsors of our report. Thank you to Ag Risk Advisors. With the pasture rangeland forage deadline on the horizon, December 1st, Ag Risk Advisors is offering a free long-range forecast webinar from Brian Bledsoe on November 11th at 7 p.m. Visit prfadvisors.com for that link. This report also brought to you by Montana Livestock Ag Credit. With elevated costs and rising interest rates, producers need a lender that understands agriculture. Specializing in operating loans and fixed-rate real estate loans, Montana Livestock Ag Credit can help ranchers develop financial solutions that fit their needs. Give them a call for current rates. And Montana Fish, Wildlife, and Parks would like to remind hunters that respecting private landowners and the access they provide is more important than ever. Positive relationships between hunters and landowners impacts all recreationists. It's up to us. Respect access, protect the hunt. Hard for me to say where to even start as we begin to dive into our cattle markets, but leverage is going to have a lot to say about the direction of these prices. After 4 years of a shrinking beef cow herd, that's finally caught up to the cattle market here. We've shrunk the numbers due to drought and limited profitability since 2015. Going forward, it appears that the contraction in the beef cow herd could be more than previously thought. Beef cow slaughter is on pace to be up 11% from last year, with the most aggressive culling rate since at least 1960. This year started with national beef cow numbers down 700,000 head from 2021, and CattleFax says that could fall another million head by the start of 2023. With the smaller number of replacement females kept back, they're not projecting the cow herd to reach its low point until 2025 at 28.6 million head. That's 500,000 head below the previous cycle low set in 2014, but of course weather is going to have a lot to say about when the cow herd begins to rebuild. In 2022, drought has played a major effect on placements of cattle into feed yards. It's pulled a lot of calves forward just because the forage availability hasn't been there, but also we've seen more heifers diverted into feed yards. The cattle on feed report has disappointed us for most of this year, but finally that report came in right where it was projected. Inventory down 1% from last year in the October numbers, placements down 4%, and marketing's up 4%. One of the real telling factors in the October report was the decrease in placements from August to September. Usually we see that placement number climb through October, but this was the first time since 2006 that number went down, largely a result of drought, and really points to the tightness of the current cattle supply. Now, you couple that tighter supply with factors like the aggressive processing pace that we continue to see, running 1% ahead of last year's numbers. Beef exports are going to be record large this year, and we've actually seen those exports $1 billion a month almost every month this year, so very strong numbers there. Domestically, beef demand is holding up surprisingly well to inflation. You can see the choice box beef cutout there has trended down for much of this year, but in October it rebounded, getting above $260. So consumer beef demand seems to be holding in pretty well. All that has helped to create a substantial leverage shift in the cattle industry over the last 2 months. Fed cattle prices as a percentage of the beef cutout have improved from 38% a year ago to 53% today, the highest since before the pandemic. And we are seeing that reflected in the futures market, especially December live cattle. They hit a contract high in the wake of that cattle on feed report. You can see all the way out into next year, we're talking live cattle futures in the 150s, looking pretty strong there, and that strength is also reflected in the cash cattle trade. It's the highest we've seen the cash market since 2017, spring of 2017 actually, and we're now trading live cash cattle over $1.50, dress sales at $2.35, and that looks to continue moving higher. Now, the feeder cattle futures haven't done as well as the live cattle. Of course, they're being pressured by corn prices that are in that high $6 money, but they are trending higher, at least for the time being. And you can see those spring feeder cattle futures in the mid 180s. But go out to next fall, that August contract over the $2 mark seems to offer a lot of support for the direction that this market is headed. Now, for many ranchers, this is the most expensive calf crop they've ever raised. That due to the most expensive hay they've ever purchased to get through the last winter, but also we're seeing the inflation of costs going up, interest rate rising. It is creating a lot of challenges for producers, but thankfully the calf market is trending higher as well. We're up 20% from last year's numbers, with a lot of our auction markets reporting prices that are $30 to $40 a head over last year. Actually an odd year here for calf prices, where we peaked in August. Usually the peak for the calf market comes in the spring, but this year we found that top at $205 in August. Since then it has trended lower with the typical seasonal pressure we see in the fall during the calf run, but that should be near the bottom, maybe even starting to rise, it looks like. And we know that cow-calf producers do have a little more leverage in this market. Looking at some of those local auction markets, those real light steer calves are meeting the best demand as buyers look for calves to develop into yearlings. Shots do continue to make the difference though, as buyers are willing to pay a premium for calves with 2 rounds of vaccinations. Some of those 3-weight steers north of $250, light 4-weights $2 1/4 to $235, heavier 4-weight steers $220 to $230. The lighter 5-weight steers staying above $2 from $205 up into the $220s. Some of those heavier 5-weights in the $190s, but depending on location, they've even been above $210. 6-weight steers in a pretty wide range from the $180s to up over $2. This bred female market is going to be very interesting to watch over the next couple of months. There's definitely price incentive for producers to expand herds, but cost pressure and forage availability are preventing herd rebuilding from really getting going. At that Montana Angus female bonanza sale at Pay's, AI bred heifers averaged 2,080, naturally serviced heifers at 1,862. Those averages 9 to 13% ahead of last year. As moisture conditions improve, we will see demand increase for bred females. How high the market goes is difficult to say. I think we all remember 2013 and 14 paying $3,000 for bred heifers, and even seeing running age cows selling for $2,500. Don't know that it'll get that hot again. A lot of those cows never had the chance to pay for themselves with how quickly the calf market came down, but once those moisture conditions improve, we will see a lot of demand for bred cows, and I do think that price is going higher. Wrapping us up here, the National Oceanic and Atmospheric Administration expects a 3rd consecutive La Nina winter. That means wetter and colder conditions in the north and warmer and drier in the south. In NOAA's updated drought outlook, they're expecting west of the Rockies and the PNW to see drought conditions improve or even totally end. A much larger swath of the country, though, is expected to see drought continue or worsen. And as you look at the map, that's the heart of cattle country, so herd contraction may continue through the winter, especially in the south. Now, I'm no weatherman. I can't tell you what the weather is going to do in 2023, but if you want to have a look at that long-range weather outlook like we spoke about at the top of the program here, head over to prfadvisors.com. November 11th at 7 p.m., Brian Bledsoe will discuss what to expect next year, and Ag Risk Advisors will be on hand to answer PRF questions. That deadline to enroll in PRF coming up on December 1st. Well, we covered a heck of a lot of information today. For more livestock markets and news information, head to northernag.net. Thanks so much for joining us. I'm Colter Brown. Have a good one.